All right, let's take a look at it. So we just had this trade that came off. So we've been walking through this all morning. And we talked about how this is our line in the sand this morning, right? We talked about this is our line in the sand. There's our line in the sand. And as long as we stayed above this line in the sand, this is our outer zone. These are the zones that's been tested for the past 30 years on the S&P to be the best zones to reverse overall price according to our algorithm. So I talked about on the microphone, if we stay above this zone, then we're looking for buy retracements only. If we get outside of this zone, then our dual trend filter is not going to agree. We're going to look for what's called an LG1 push. An LG1 is a liquidity grab push that is trying, where the market is trying to go from an uptrend to a downtrend. In other words, it's going to turn green to red zone. This is called an LG1 strategy. We have two strategies that members have. We have an LG1 strategy, we have an LG2 strategy. An LG1 strategy is where the market is in a transition phase when my trend filter goes from green to green-red or red-green. It's going into a chop mode where it's trying to transition from an uptrend green into a downtrend red, okay? The strategy, what it will do, it will get you in the first liquidity grab, after you close two closes outside of my line in the sand, which is my outer zone. Now, these outer zones automatically come up, just like the line in the sand right now in the market live right here is 61.26 3/4. We know we want to still stay short the market, keep selling retracements, as long as I stay below 61.26 3/4. So this is us calling it LG1. It would have got you filled at 61.27 1/4. Had a nice run. Before this even happened, I said our target would be all the way down to this level of 18 3/4. I said 18 3/4. I missed it by one tick. And this is when the market was all the way up at 28.5. I said 18 3/4 would be the target. The low was 19. I'll show you how I projected that also. I missed it by one tick projection before it even got into 27 1/4. Market profile told us this level was our target. Then the market is now red. This is now our LG2 strategy, which I educate traders is my favorite strategy. Before this market even pulled in, I was on the microphone and I told the members that we're looking for a V-top. I asked, what are we looking for now? And the members said we're looking for a V-top. V-top, first liquidity grab short. So we want the counter trend traders to push the market against trend. They come in with a green candle against my zone trend. We want that. We want to push it up and get a big red candle down. Once that big red candle goes down, this is called a V-top. This is, you want to turn on the LG2 strategy. So the difference between an LG2 strategy and an LG1 strategy, a liquidity grab 1 strategy, and a liquidity grab 2 strategy is simply an LG1 strategy. You're trying to get the push when they're getting a trend change when you break the line in the sand by a couple candles and trying to get that initial hard push down, which I projected within one tick is beautiful. Then when you turn red, now you're in a trend strategy. Now we're trending, right? Now the market's telling us we're going lower. We're going to short low, buy lower. We're not going to try to buy the lows and sell the highs like amateur traders do. We're trying to short low, buy lower. We're not trying to buy low, sell high. That's what the novice counter trend traders do. We know they get run over. We're trying to short low here from this V-top and cover lower. So what I said on the microphone, and you members got it right posting in the room, I said, what's up next? What's up next? And right there, if you look on the bottom, I scroll back up. Bri, you got it right. Looking for a V-top at 943. So 943, Bry, and also Gary, you got it right. You said looking for a V-top. So we're pushing it back up here at 943, pushing back up, pushing back up. I tell traders wait 3 to 5 minutes after news, start looking for a trade. This is at 949, almost 950. 3 minutes after news, start looking for a setup. Brian Gary got it right. They said look for a V-top. V-top comes in. Turn on the strategy. It's a matter of clicking a button on or clicking a button off. One button on, one button off. All right, we're still running. Still got a runner in here. So we clicked it on, and the first LG2 got in right there at this level, 61.17. 61.17, the automated algorithm got it in, put your stops in, and put your targets in. Now what are we looking for here? As long as I don't break 18.5, I'm looking for a what? I'm looking for another V-top. If I break through this level right here, I'll change sentiment just like we did back here. We'll try to get an LG1 short. But I'm still looking for a short. I'm looking for another V-top to fire in this trade again. So LG2 got us in this short automatically by turning the strategy on. We had a big heads up. You traders looked at this at 943. The trade happened at 950. You had a huge 7-minute heads up before the trade even happened. Just like now. Now we're looking for a V-top. We're looking for an LG1 again. Our LG2 strategy entry. There's your LG. Okay? Your V-top. So what you'll do is you'll look for the first liquidity grab short, and we'll try to get into this position. Now let's go back here real quick. I want to show you how you can project these opening gaps. Okay, so our target just hit here, first of all. So there you go. This is LG2 V-top. Target just hit. Turn the strategy on. Good to go. But look at the gap target. How did I know where our possible targets are on these runs? Previous market profile told me this morning at 8:30 in the morning, I told traders if we break, it was at 8:31 at the time here, we break this, our target's all the way down to 18 3/4. 18 3/4. Sure enough, it broke 18, we got a liquidity grab short, it went down to 19, went back up. I also said if we break 18 3/4, what's my target? All the way down to 07 1/4. We told traders 07 1/4 would be the target. 07 1/4 would be the target. There's your entry, 17.5. I said 07 1/4 was our target that we knew at 8:30. At 8:30 a.m. Eastern Standard Time. We knew this is my target, where all the market participation was before. Right here. So we have a big run from here to there, potential. Called the target out this morning. You want to get into the LG2. That's your target. You can exit all your position there and let the runner run. Up to you. My target this morning, before this even broke, I told all the traders in the room, if we close 2 candles below, there'll be an LG1, which is a push down. The target would be 18 3/4. I missed it by 1 tick. So take a look at this. Look how the targets were hit. Not only did we call the LG1 strategy before it came up, against a leading indicator, closed 2 candles, got you in the first liquidity grab, target. LG2, gave you a big heads up on that 7 minutes before it even happened. You guys even called it out. LG1 gets you in. Your target 61.07 1/4 based upon these market gaps over here. Now the next market gap, I'll show you in a second, is even below that. If we get below that, we'll look for another LG2. We're good to go. But that's how you want to trade the system. If you only want to trade with trend only, red, red, or green, green, only trade the LG2 strategy. If you want to trade the transition, when you break my line in the sand, like my line in the sand right now, it will tell you exactly where it's at, the breaking point in the market. If we close 2 candles outside of it, you can turn it on and try to get a run. Don't make it any more difficult than that. So if I look at this on a blank chart in the trade room, it's very simple. Very simple. I said, this is my line in the sand before it even broke. I said, if this breaks by 2 candles, we're going to look for the first liquidity grab, and the target's going to be down here at 18 3/4. As this was green, live on the microphone, as this was ticking, I said they're trying to grab liquidity. If this closes red, it should drive itself right down to this gap on where all the participation is. 18 3/4. It missed it by 1 tick. It did. 26 fill all the way down. Then, as the market starts retracing, I asked traders in the room, I said, hey, what's next? Now we're red. Trends down. We let the market give us what it wants to give us. We don't buy red. We short red because we want to catch all these counter trend traders. Why? Because we know all the sell stops are going to be below right here. Right here where the counter trend traders are resting. Because if they're trying to buy this low and they're trying to pop this market back up, you know their sell stops are right there, right below this low. Look where the liquidity grab happened. Look where my yellow candle comes up. That's where they got caught, right there. They got caught and taken to the woodshed. And sure enough, our V-top came in and it drove price with our algorithm. Automated entry, stop, exit. All you got to do is turn it on. It will manage your entry, stop, and exit for you. It takes the emotion out of trading. There's the driving price. Now what's the market trying to do? The market's what? Do we buy here? Do we buy here, guys? Guys, do we buy here in the room? Do we buy here? Let's go ahead and buy this low. What do you think? Do we buy here, guys? Do we buy these lows? Let's go ahead and buy these market. Let's get in. Let's get in and buy the market. It can't go any lower, right? Heck no. We're smarter than that. We're more educated than that. Counter trend traders are getting taken to the woodshed. V-top, V-top, V-top. Short it. Where's their sell stops? Right below here. They're going to get taken to the woodshed again. That's trading order flow, guys. And that's the difference between winning and having an edge and losing and not having an edge. You have to understand that when we're trading these electronically traded markets, they're leaving their footprint. The market's telling us where it wants to go. This transition told us. So we're going to put ourselves in the highest probability chance to win. And if we're wrong, we're going to keep our stop just outside of these edges. We want to limit the risk by keeping outside of these edges. We want to keep outside of these V-tops. We want to keep outside of these V-tops. We want to keep outside of these V-tops because that's order flow. We want to keep outside of these V-tops. That's our stop. So if we're wrong, and when we're wrong, let's stop out of the market, right? We don't want to, because this V-top is telling us the pressure is to the downside. Now, some of you like to have lower stops. You'll bring it within a percentage of the, some of you like 25% of the percentage of the candle. Some of you guys like to use a 15 tick stop on a 20 Renko, which is fine. But just know that it's allowed to breathe all the way up to the size of that Renko. In case you get a deep liquidity grab like it just did. So what are they doing? Red. They're shorting the market. That simple.